Welcome to Dr. Fred Markets. This is not financial advice. While most people scroll past the noise, a few take the time to understand what's really going on. Finance, crypto, artificial intelligence, this is where it all connects. You made the right choice being here. Let's dive in.
You are not underinvested in stocks, you're overinvested in obedience. Verdict: US stocks are training you to love 5% upside and ignore 500% upside standing right next to it in crypto. This is not financial advice, but here is the truth. Signal 1. The S&P 500 is calmly bleeding at 731.58, down 0.31% today. While financial media screams about cruise ship viruses, geopolitics, and celebrity gossip like that explains anything about your retirement. Your safe index is basically a glorified socialism for boomer capital. Slow, dull, and increasingly propped up by a handful of tech names doing all the heavy lifting. Look at Nvidia. $211.50, up 1.77% on the day, while the broader index shrugs. The market is quietly telling you something brutal. The index is your participation trophy, big tech is your actual performance, and everything else is ballast. You're not diversified, you're diluted. Signal 2, the entire US market narrative is stuck in the same loop. Stay the course, buy the index, ignore volatility. Translation: keep feeding fees to the system, while your real upside gets regulated, ETF'd, and neutered into oblivion. The more obedient you are to the index religion, the less exposure you have to where asymmetric returns actually live. Signal 3, crypto still trades like a street fight, while US stocks trade like a beige waiting room. Crypto goes limit up and limit down in the same week. Stocks grind in 1% ranges, while the world lurches from war headlines to election drama. Every scary headline gets weaponized to keep you docile in S&P land and terrified of volatility where real repricing happens. Here's the cliffhanger. The same mindset that watches the S&P drip 0.31% and says, "Stay calm," is the mindset that will miss a generational crypto repricing when capital finally gets tired of pretending 7% a year is heroic. You're not avoiding risk, you're outsourcing courage. The connection: US stocks today are the respectable lie. Crypto is the disrespectful truth. The S&P says, work 40 years, maybe retire, don't ask questions. Crypto says, I will either change net worth or knock out your teeth in 5 years. Pick a side. When Nvidia pops 1.77% while the index droops, that's the market whispering. Concentration beats diversification theater. When you zoom out, the S&P is just a slow-motion vote for stability, politics, and policy. Crypto is a fast-motion vote for exit, sovereignty, and pure price discovery. The more chaotic the headlines get, the tighter the S&P trades, because every institution on Earth is leaning on it as the do not panic signal. Meanwhile, crypto becomes the panic, the relief, and the truth, all at once. Here's what nobody wants to say out loud. Your 60-40 portfolio is not conservative, it's complacent. You're fully exposed to one regime: US policy, US elections, US courts, US everything. And you call crypto risky while your entire future hangs on a few guys in suits and one central bank board meeting. The real diversification is philosophical. US stocks is belief that the system holds.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
Crypto, bet that the system leaks and capital wants a side door. So what does this mean for you? First, if your entire future is S&P and safe US stocks, you're not diversified, you're domesticated. You live on the financial equivalent of processed food. You get all the calories, none of the upside. Second, crypto is not your lottery ticket. It's your only uncensored vote in a rigged popularity contest. It will not make you rich by accident. It will make you accountable by design. Exposure to that chaos, even small, rewires how you see every other asset. Third, the goal is not go all in on coins or dump your 401k. The goal is stop lying to yourself about where growth actually lives. If your net worth chart tracks the S&P and ignores crypto entirely, you're basically saying, I trust the same system that inflates away my savings to also rescue my retirement. This is not financial advice, but here is the truth. 1. US stocks are the comfort food of capital, addictive, numbing, and guaranteed to keep you slow. 2. Crypto is the cold shower, violent, honest, and exactly what your portfolio's metabolism needs. 3. If your money never feels uncomfortable, your future will. Your move: audit your exposure. Write down your actual percentage in US stocks versus crypto. If crypto is a rounding error, your future upside is a rounding error too. Subscribe, because tomorrow, when everyone else is still worshiping the S&P ticker, we're going to dissect how to size crypto exposure without nuking your sanity. You don't need permission from Wall Street to evolve, just the guts to stop obeying. And yes, that means you will have to disappoint a few buy and hold the index forever disciples at the next barbecue. When someone says, "But the S&P always goes up," translate that in your head too. The past 40 years were kind to my parents, so I assume the next 40 will be kind to me. That's not a strategy. That's nostalgia with a ticker symbol. The real question isn't, is crypto risky? The real question is, can you afford 40 more years of 2 to 4% real returns while innovation sprints past your balance sheet? You're not competing with your neighbor. You're competing with exponential curves, AI, blockchains, tokenized assets, automated markets that never sleep. So when the system finally admits it can't pay what it promised, the people who hold scarce digital assets won't be shocked. They'll be liquid. In the next episode, I'll show you why 1 to 5% crypto is cowardice, not diversification, how to separate moon cults from real networks with actual users and fees, and the only 3 questions you need to ask before buying any token. Until then, run your numbers. If 80 to 90% of your wealth is trapped in one aging empire, protected by one aging currency, blessed by one aging central bank, you are not diversified. You are concentrated risk disguised as tradition. This is Dr. Fred Markets. Question everything you were told about safe, because safe is exactly what's quietly running you out of time. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.